Welcome to Place and Experience. Indulge your senses with immersive game titles. Boost the excitement with our engaging promotional tools and generous network promotions. Be in control with XI Viewport Management Tool and experience seamless gameplay powered by X Platform. Enjoy Place and Experience as our partners do in over 20 regulated markets. And get ready to go big. Big play is on. Placent.
Well, there you have it. And we are live once again, coming at you live with your Next.io weekly news, bringing you the biggest headlines of the week, whether you want them or not. Isn't that right? Zach, my esteemed colleague, joins me today in Nico Jansen's absence. Zach, welcome to the stream. How are you feeling?
Yeah, I'm doing great, Connor. I got to say, summer has well and truly ended today. I feel it's been like non-stop torrential rain for the past week. It feels like. So yeah, I guess I'm entering the autumn blues.
Well, I suppose so. But personally, I would rather be in rainy South London than sunny Lisbon, where so many of our industry friends and colleagues are currently at the moment, including the other half of the great trio, the threesome, greasome, twosome, and all the rest of it. Oh, it's raining in Lisbon, apparently, so it's fine. It's not just us. Everyone's having a bit of rain. I hope everybody's having a productive week over there. Shout out to Nico if he's found the time to watch. Unfortunately, he's far too in demand and important to join us today, but maybe he'll be back next week with, who knows, all kinds of new connections and knowledge. So wouldn't that be nice?
It's actually genuinely cheered me up a little bit to hear that it's raining over there.
Yeah, absolutely. And I'm not that big a fan of custard tarts anyway.
Yeah, that's the main thing, isn't it?
So there you go. Anyway, Zach, we had to come on, even though a lot of people are busy this week with the conference. We had to come on because it hasn't been the quietest week in the world on the news side of things. It's been a pretty difficult week for Light and Wonder. I think that's fair to say. But on the other side of the coin, there's been some pretty good news for some other companies. So we're going to dive deep a little bit into what's going on at Light and Wonder. And then we're going to bring you an update on the biggest M&A deals that we've seen this week, because the deals just keep rolling in. Businesses keep getting bought and sold in this sector. It's absolutely like a runaway train this summer. It's just been one thing after another. So we've got a couple of deals to update you on as well. But first, I think we should dive into our main story of the week, which is that Light and Wonder was given a preliminary injunction on Monday by the Nevada District Court, ordering it to cease profiting off its Dragon Train series. So the injunction will prevent Light and Wonder from selling, leasing, or any other commercialization of the Dragon Train brand of slot machines. So just to take you on a little trip down memory lane, Zach, this began in February this year when Aristocrat, the Australian slot giant, sued Light and Wonder for copyright infringement and trade secret misappropriation relating to its Dragon Link game. Now, for the avoidance of confusion, I think we actually have got a picture we can show, which is these two games side by side. So you've got Aristocrat's Dragon Link on the left and Light and Wonder's Dragon Train on the right. Possibly not a million miles apart, these games. You could be forgiven if you were a consumer. I think you could be forgiven for confusing one with the other, let's say, Zach. But of course, that likeness and that similarity is not enough to really be sure of something like copyright infringement. So anyway, they might look similar. That doesn't necessarily mean there's going to be a copyright infringement, but that is what Judge Gloria Navarro has found in Nevada. So Aristocrat sued Light and Wonder in February because it said this game was misappropriating trade secrets and it was a ripoff and all this. In June, the suit was allowed to proceed, and Judge Gloria Navarro dismissed Aristocrat's other claims of trade dress infringement and deceptive trade practices, but she did move forward with the copyright infringement. So she wrote in her opinion, the court finds it logical and reasonable to conclude that Aristocrat is extremely likely to succeed in demonstrating that Light & Wonder misappropriated Aristocrat's trade secrets in its development of Dragon Train. So there you go. That's what the judge ruled. And then earlier this week, she put that injunction on Light & Wonder, which means they are not allowed to profit off this game anymore. In response to that, Wonder put out a statement saying that it intended to vigorously defend against Aristocrat's claims, and it tried to give some sense of reassurance to investors as well, because it reaffirmed its 2025 earnings outlook of $1.4 billion in adjusted EBITDA. It highlighted that Dragon Train represented less than 5% of its 2025 adjusted EBITDA goal. Although saying that, for a big company like Light & Wonder that expects to generate $1.4 billion in adjusted EBITDA, 5% of that is a pretty big number, Zach. So to be fair, it's obviously a very popular and successful game, and obviously Light & Wonder will not be very happy about the fact that they're no longer allowed to profit off it. So it also said it's moving forward on a number of key initiatives to mitigate the immediate impact and possible business disruption, and that its capital management remains unchanged. So it's still going ahead with a $1 billion share repurchase program, as well as future organic and inorganic investments. President and CEO Matt Wilson was pretty unfazed. He said, "We have the best game design talent in the industry, and they are creating great games across all our channels." So there you go. It's a bit of a kick for Light & Wonder. Certainly not happy news for them, but they're remaining sort of steadfast in the face of it all. You will remember, Zach, there was another case that was not a million miles away from this one, which was also in the Nevada district, which was against Evolution. And Evolution basically alleged that Light & Wonder had stolen its intellectual property from the Lightning Roulette series of games to create its Roulette X and Power X games, which is another multiplier-based roulette game. So it's not the first time Light & Wonder has faced accusations like these. So obviously they know what they're up against and they know what they're dealing with, but it does give us that bit of uncertainty, doesn't it? And kind of puts things into perspective a little bit for Light & Wonder. And certainly, Zach, the investor reaction did show some degree of fear. I'm going to hand over to you in a minute, because I think a lot of analysts have looked at this and said, actually, this is not necessarily a bad thing for retail investors. There's an opportunity to be had here, because Light & Wonder's share price crashed by about 20% this week. So I think we've got a graph we can show you. It just looks like the price has fallen off a cliff. If we can get that chart up in the background, maybe we'll be able to have a look, but it's very, very consistent share price until about Tuesday, and then it drops by about 20%. So maybe we're having some technical difficulties and we can't get that chart up, but maybe we'll get to see it soon. But Zach, here we go. So there you go. You got a very consistent performance, and then all of a sudden it just drops off by about 19-20% and kind of stays there, and it's still down there at the moment, trading at about $91 or $92, down from about 112. So pretty significant drop. Thanks, Lorena, for getting that up. But Zach, like I say, if you're a retail investor, or you've got a decent portfolio and you've got gambling stocks in that portfolio, it's not necessarily a bad thing for Light & Wonder's price to go down. Do you want to tell us a little bit about what people have been saying about this price drop this week?
Yeah, of course. Thanks, Connor, for the telling me a bit about this case. I mean, there seems to be a little bit of a mystery at the heart of this, right? While you have Light & Wonder reiterating their 2025 EBITDA, saying, we've got other things going on, this isn't going to affect that. At the same time, you've seen a 20% fall in share price, like you said, not just on the NASDAQ where it's listed, but also on the ASX in Australia, where it's got a dual listing. So it's a little bit, there's a little bit of a mystery there. What exactly is going on? So, I mean, the investor reaction has generally been, from analysts, that this is something that Light & Wonder to be able to get over relatively easily. For example, the analysts at Truist said this would create a buying opportunities for investors. But they've got other growth levers that they could pull, as the management laid out in its own statements after the injunction came out, and so they should be able to get around this. I think what else analysts are keeping in mind is that management has so far been pretty good. They, as Truist said, they've demonstrated near flawless execution over the last few years. I think if you look at their share price, I can't remember what the number is off the top of my head, but I think it might be like 53% at a time when a lot of companies are really struggling to hit the peaks they hit in 2021, those kind of times. And overall, it said that it's going to be looking to see how management will offset the fall from the Dragon Train maybe at G2E or on the Q3 earnings call. So that's one view, and I think there are other analysts who've said similar things. But for a more skeptical view, you had Macquarie out there who issued a note today. They chose to reduce their EBITDA guidance by 1 to 2%. Getting back to the mystery question, what's going on here? What they say is that the fact that they reiterated their guidance means maybe one of two things. Either the business was tracking ahead of guidance already, so it won't, so this won't affect it, or there are levers to manage operating costs or pull forward product launches, which is back to what the management was saying earlier. I think they pointed out that the share price fall could be pricing in other things than just the pure earnings. For example, this could mean like an increase. Investors are starting to think seriously about the risks on the outcome of litigation, not just on this suit, but also the Evolution suit, which is also progressing through the Nevada courts. It could be a hit to management's credibility. Maybe they're not quite as good as everyone seems to think they are, or maybe there's that medium-term impacts on volume. So yeah, it's a little bit of a complicated situation, but it does seem to me that really how you price this is your take on how effective management are. If you believe in management, then I think you can maybe live through this, and maybe it's a good time to buy, but maybe not, and then you'll have to price it in as well.
Yeah, thanks for that, Zach. I've just been looking actually at the 5-year stock charts, which I haven't got a photo of to show the viewers, I'm afraid, but you can all Google it for yourselves. And actually, 20% in a day. Obviously, no one's ever going to be happy about that if you're a business manager or a CEO. But actually, it was coming down from that $112 price point, which is almost, I think, an all-time high for Light & Wonder at 91.61 as it is today. It's still trading well ahead of where it was at the beginning of this year. Started the year at $77. It's still at 91 even after that big dip. So I think also if you look at this kind of quite precipitous, it's quite a steep incline. So it's gained probably 20% or more. No, it probably gained something like 50% over the course of 2024. And you know how these things go. It's always up and down. There has to be a correction at some point. So probably a lot of those sellers who offloaded stock in the wake of the injunction had been kind of, it's like the perfect excuse just to sell some, isn't it? Because it's been like such consistent growth. Eventually, what goes up must come down, I suppose. So even though it sounds like bad news, I do think in the grand scheme, as you said, there's obviously significant confidence in management among analysts and among investors. I think Macquarie's analysis was very good. The fact that Light & Wonder reiterated its guidance means either it was already tracking ahead or it's got levers to pull to manage operating costs and pull forward product launches. I suspect, well, I don't know. What would I know? But it kind of seems perhaps it's a bit of both.
I mean, there's another reason I thought the macro note was very good, and that's it linked to my article, which I was quite happy about.
Excellent. Well, everybody here knows, Zach, of course, that if you want the best reporting, you have to come to next.io. And if you want to read this whole story, all you have to do is scan the QR code in the top left corner of your screen, and there you have it. So I don't think we've heard the end of this one just yet, Zach. Obviously, it was a pretty stark, a bit of a shock, I think, to Light & Wonder. If the same thing had happened with the Roulette-X case and the court had put an injunction on its Roulette-X products, then what would the impact of that have been? I suspect that's possibly a larger proportion of revenue than something like Dragon Train accounts for, so it could have been worse. But it ain't over yet. There's going to be a few more steps to this one. It's not been fully resolved, so we will be keeping an eye on this one. But if the analysts at Truist are to be believed, they seem to think it's a buying opportunity, and who knows? But Zach, I think that's probably about all we've got to say on this one. Do you agree?
Yeah, I think we've kind of exhausted it. I mean, yeah, who knows what will happen next?
Who knows? Well, let's see. That's how we always end these things on this. But that's the problem with being up to date with the latest news, Zach. Usually it's developing in real time. So there you have it. Now we're going to move on to our next two stories of the week. We've got two juicy little M&A deals to discuss. Lots of excitement, lots of movement. But before we move on to those stories, I would just like to share a very quick video message from one of our partners.
Of games, hundreds of studios, dozens of Hub Market partners, an industry-leading Hub wallet, and just one API. Hub 88 is connecting businesses to a world of limitless content where the possibilities are endless. Hub 88.
There you have it, and thank you to Hub 88 for supporting us through thick and thin here at Weekly News. No matter how big the headlines are, we know we can count on you to back us up every week. So thank you very much. Now, we are moving on to our next story, which is all about Boyd Gaming and Boyd Interactive, which has acquired Resorts Digital, the online gambling arm of the Resorts Atlantic City Casino. So there you go, a bit of a New Jersey acquisition for Boyd. Financial details of this transaction were not disclosed, but we can probably have a guess. I'll give you some numbers in just a minute, Zach, and we'll see how much we think it might be worth. That's the wrong headline for now. Don't you worry, all in good time. We'll get to that one next. But for now, we are on Boyd Interactive and Resorts Digital. So, Resorts Atlantic City President Mark Gianantonio said on Tuesday, I think, that the transaction had been finalized on the 1st of September. And under the deal, Boyd Interactive, which obviously is the online division of Boyd Gaming, the casino operator group, has received ownership of resortscasino.com and MoheganSunCasino.com, along with one unused sports betting skin, meaning that it will now operate multiple online casino brands in the New Jersey iGaming market. We're always talking about how everyone wants to get into iGaming. So there you go. Boyd's going for it in New Jersey and increasing its presence there. Resorts Digital will continue to operate under the sports betting and internet gambling licenses held by Resorts Casino and the two companies will cross-promote the brands. So that's how it's going to work. They're still licensed under their original setup. Boyd Interactive has bought the assets, but they will continue to promote them alongside Resorts Atlantic City. So Gian Antonio said, "We are confident this transaction will propel Resorts Digital's proven success over the past decade to a new level through the scale of Boyd Interactive and its market-leading platform." And Boyd said the acquisition was consistent with its strategy of building a profitable regional iGaming business integrated with its existing nationwide portfolio. New Jersey has long been one of the nation's leading iGaming states, of course, and we look forward to further growing our presence in that state's online gaming market in partnership with Resorts Casino in Atlantic City. So there you go. Not the biggest deal in the world, but if you're Boyd and you're all about this regional approach, small brand here, a small brand there, they all can add up in the end. It's all about product and customer retention. And if you can get them and hold on to them, then, there's no reason you can't be a winner.
Well, there's an interesting there was an interesting Twitter thread by Chris Grove about the Boyd acquisition, which I was looking at, and he was saying that one of the interesting things about this deal is, as you can really see, how Boyd has built up quite a nice position in the US online market for comparatively low cost. I mean, this is quite a small potatoes deal, but they've also owned 5% of FanDuel. People remember that, which is incredibly valuable.
Good, yeah.
I think they've done it quite cannily. I think if you compare them to, the other regional casino group, Penn Entertainment, who famously gave back Barstool for $1 after putting all that money into it, and then signed that very expensive licensing deal with Disney, which for ESPN Bet, which is, I think you can fairly say has had mixed results so far. Although they are I think now live in New York. But as of I think maybe today or yesterday. But I think it goes to show that often having some bang for your buck is the really important thing. But I think very similar to Bet365's approach to the market. You do the best with the resources you have, and you can actually get quite a nice position, as opposed to using them in the wrong way, where you can end up burning through billions with very little to show for it.
Yes, it's very easy to spend money as an operator in the US right now. So I would tend to agree with you. Yeah, I think it's a different approach, and I think by kind of leaning into the iGaming first approach as well gives you a more. It feels like they're competing then with the likes of FanDuel and DraftKings on a slightly more even keel. They've just absolutely wrapped up the sports betting market between them. iGaming, I feel, is possibly a bit more up for grabs. Basically, you can probably carve out a bit more market share in that area. Speaking of which, the only figures we've got come from the New Jersey Division of Gaming Enforcement, showing that Resorts Digital generated revenue of $8.6 million in Q2 of this year, which was up slightly from $7.7 million in Q2 last year. So $8 or $9 million a quarter, 35 million a year. Not the biggest operator in the world, but certainly a nice little earner for Boyd. Although just comparing them, if you look at Boyd Gaming as a whole, that generated just shy of $1 billion in Q2. So this is obviously going to be a very small portion of that. But you're absolutely right, Zach. It's about finding that value where you can. And even if it's a relatively small operation, every little helps, So there you go. That's one of the deals of the week. And Zach, I know you've been looking into another one. We had a little teaser on the headline a minute ago. Let's see if we can get that back up, and you can tell us all about this other deal.
Yeah, thanks, Connor. I think there are a few things more exciting than acquisitions in the iGaming supplier markets, as you well know.
Quite right.
So this is an acquisition of WA.Technology, which is a platform provider, and they're acquiring an iGaming tech developer, Onseo, which the deal was undisclosed, but industry sources told us it was in the multi-million euros range. So yeah, I mean, it's sort of interesting in that WA.Technology is a prominent supplier in the Brazilian iGaming market, and I mean, that's quite a hot topic at the moment with Flutter's recent acquisition of WA.Nacional, hitting some headlines, which was also an exclusive. Though, I mean, but I think it's I mean, it's an interesting deal, and then the company highlighted it as it's going to bring in them some new game production capabilities, as well as some sportsbook and platform expertise to the business. And so it's going to be looking to offer in-house and on-demand services across platform, sportsbook, casino, but also sweepstakes, which is also interesting because that seems to be a very hot topic at the moment. Anyone who looked at Gig's Sportsbook investor presentation the other day would have seen that they're looking to capitalize on that market, which although it seems to be beset with potentially some regulatory risk about that there is a potential clampdown. It's definitely like an area of quite big growth. But I mean, honestly, it seems to be quite. I mean, it's not a company I'm massively familiar with, but the team apparently consists of over 700 developers, which seems to me quite a lot. And so it said it's going to be able to offer clients new features, quick turnarounds, and rapid customization. And the company itself supplies games to several well-known industry names, including Aristocrat, Bet365, BetVictor, Barley's, IGT, LiveScore, and GameSys. So that's that.
There you go. So pretty good roster of clients. Anyway, you're talking about household names here, Bally's, BetVictor, Bet365 in particular. Yeah, and it does seem like a kind of transformational deal for WA.Technology. Not a name that we're used to hearing about every day, but sounds like a pretty substantial deal. The thing is with these acquisitions, you never know. It could well have 700 team members, but if it's not profitable, for example, that's going to bring the price down of an acquisition, and so on. So we haven't got the full details on this, but given that WA is a pretty big name in the Brazilian market, I think it would make sense with the timeline in terms of the fact that Brazil's gearing up to launch very soon. Anyone who's looking at that market can now see how many license applicants they have and all the rest of it. So there obviously is a lot of optimism about growth in that market and all the rest of it. So for WA, could be a big opportunity to expand their capabilities.
I mean, now could be like the opportunity, right, for a lot of people looking to not just WA, but anyone looking to capitalize in LATAM. I mean, we saw this in the US where you had like all these operators like stumbling at once.
Mm-hmm.
And then I'm sure that was like a real boon season for platform providers. But then as time's gone on, the list got narrower, and the bigger operators increasingly like to have in-house tech, and so it becomes a bit harder to sort of make it big on the B2B side. I think similarly, I mean, we probably won't see the levels of consolidation we got in the US because it's a very different market. I mean, the costs are much lower, like several of reasons. But last I checked, I looked at the license application portal today, and there were 132 applicants, several just in the last few days. And I don't think long term the market will be able to sustain all those companies on a long term basis. So, like now might be the the time to make money before things get more consolidated.
Yeah, you're absolutely right. It's the people who sell the picks and the shovels, so to say, isn't it? In the gold rush. So absolutely, tech providers are probably in a strong position there. Yeah, it's tricky to know about how many brands we're likely to see survive in the market. Obviously, for us, we have a different perspective on this because we live here in the UK where we've got like a long tail of 1,000 licensees or whatever, and all sorts of different brands under white label deals. There's just so many brands that are licensed here, and they seem to keep it moving. They keep on surviving. I think what becomes difficult in a very mature market like this is the regulatory burden. And as that gets tighter and tighter, that begins to cost you more and more. And without that efficiency of scale, it's difficult, I think, to become really profitable. In the US, I think that was doubly true because you have the state-by-state licensing, and then all of a sudden, if you want access to the whole market, well, you're going to have to get 30 licenses and keep up with all of that. And Brazil, I suppose, will probably be somewhere in between. But obviously, it's an area of high interest. We'll keep an eye on WA.Technology and what they plan to do there next. But just a quick one, really, this week, Zach. While everyone's away and enjoying the rain in Lisbon, enjoying some custard tarts and some saggies, I'm sure. But I think those were our biggest stories of the week so far. And I think we'll probably leave it there if that's okay with you. Yeah. All right. Well, thanks for joining me, Zach. Thanks for joining us in the comments, anyone who commented, and thank you for watching. And we'll see you back here at the same time in the same place next week. Bye, everybody.
Thanks, Connor. Bye.